Hey guys, how's it going today? So I wanted to do a quick update on Metaverse. Today is October 30th. It's about 1 p.m. my time central. So we got about 35 hours until this hits BTC. And sorry, until it hit BTC, which is still quite a bit of time actually for a pretty big correction to happen. And I want to say first of all that when we draw Elliot waves, okay guys, we don't know that we're right or wrong until usually in hindsight, all right? So I'm gonna say right now that the Elliott wave that I drew last time, it was absolutely right, but now that this new one is forming, we have a lot more information. So I wanna draw it the proper way now, okay guys? Now that we got a lot more information, we can actually draw it properly. So I'm gonna be really quick. This one won't be like a 30-minute video. We're just gonna start on this wave this time, all right? It's just for an update. Usually the points that we want to draw it would be like this right here. This is absolutely an A, B, C, okay? A, B, and C. Like I mentioned last time, this is a truncated fifth where it doesn't quite hit a lower low than A because there's a lot of pressure for it to stay bullish, all right? But because it didn't break out into wave 2, wave 2 ending and then wave 3 starting, it actually started a WXY correction, which I'm going to draw out for you guys. And now we can actually confirm some points. So this would be one point right here. This would be where Y is right here, or sorry, X right there. And Y would be somewhere down over here actually. And let me show you guys the logic behind it. Actually, now that you guys have an idea of where it could land, I'm thinking about not $3, but probably tomorrow 1 p.m. it could hit about 320. And I'll show you guys why I think it's going to hit it. So that's one, right? And we're actually going to get a second one right over here, just based on how it's looking so far. Are you guys following me? And we should get like maybe a third one right around, it could be even right here. Somewhere here. But it's definitely going to stay in this channel. Like we could even be looking at like a $1 drop. Because if you look right here, guys, if we look on the data and the price range from here to here, right? This was over 2 days, right? And it went up like 50 cents. But for the very last correction, we could see a very steep drop. And why do I think it's going to hit this point? Well, first of all, let's count the waves here. 1, 2, 3, 4, 5, 6, and 7. And we're going to make sure that you guys also understand this. Once again, I'm not going to make this a super long video. I'm a little bit tired today, but I wanted to give you guys an update because I know a lot of people are following this particular coin and we're all pretty excited for it to hit BTC, right? And this could be Y right there. This could be A, and this is B actually. B, and this is most likely C somewhere there. We're not talking about exactly there. We could just get like a double bottom, like how we got a double bottom right there, right? So I'm gonna shoot for somewhere maybe right here, just based on symmetry. Something just like that, and then we might not even touch this bottom over here. But that's basically where it ends. Now, you guys might be wondering, why was this point B last time, right? And why is it not this one? Well, the reason why I'm now choosing this point is because that's where the EMA, the 55 moving average, is actually hitting it, right? This is where this particular resistance line that's formed over this one, X right here, and B could now be here. So it makes sense to me. And another reason why I think it will be like this is simply because of this right here. Within A to B right here, okay guys, A to B, we have an ABC three-wave pattern here. This wasn't emerged until basically today, right? I thought that this one right here was basically the end of wave B last time, but because it didn't just keep going downwards, we can now assume that B is right here actually. And that looks really clear, right, gentlemen and ladies? Right? So for every A, B, C like that, okay, that's how it is. And let me just grab you guys my actual book to show you as well. Why? This is an Elliot Wave book that I just kind of use as a guideline. So there we go. No, that's not that detailed. Let's see if we can zoom in over here just to follow some guidelines. See, notice we have from A right here to B right there. We have only 3 waves, right? A, B, C. And let's see if I can find more examples for you guys as well. So it'll be worth it, guys. Like, just so if you guys actually see it from a textbook, there we go. Okay, 1, 2, 3, 4, 5, and then we have A, B, C, right? So from points A to points B, we usually have a 3-wave zigzag in a typical bull market, right? Even in an XYZ correction, let's see if we can find it. There we go. Okay. So I'm gonna just kind of minimize this so you guys can see what I'm talking about right here. Okay. So this is from literally a textbook, guys. It's from an Elliot Wave textbook, and let's see if I can make this kind of small so you guys can see it as well. It's from a pretty good book, I'd say. So notice we have right here. Sorry about that. I'll pull it up again. We have A, B, and C. Well, we have right A, B, C, and this is where W is right here. And if we look from A to B, this particular region right here, we also have a B, C, or a 1, 2, 3 zigzag pattern, right? And then going up, we definitely have similar structure as well. Now, just to move it over so you guys see this, okay? I'm going to count this for you. 1, 2, 3, 4, 5. It's hard to disagree with that counting, right? So now take a look at this right here, okay? See from X to A, we have 1, 2, 3, 4, and 5, right? Now, if you look from A to B, we have 1, 2, and 3, right? And look at what we have here as well. So once again, this is literally from a textbook, guys. So it's really hard to debate with a textbook. It's I have many different versions of an Elliot Wave book, but this is the particular one that I use for a condensed version, just for quick references. So once again, this is where our A to B is, and that's A, B, C. So if we actually count our wave structures, okay, if we count literally every single zigzag, right, we should have kind of like that, okay? This one actually makes 5. It's just hard to see. Something like that, let's say. I'm just doing it really fast. And that one makes like this. And this one actually has 5 in it as well. It's just hard to see on a really high time frame. Okay, now you guys are going to count with me, okay? We're going to count 1. We're going to count the pink ones. 1, 2, 3. Sorry about the messiness of the lines. They're accurate. Trust me, they're accurate. But I just didn't want to spend a lot of time counting it or drawing it properly. I mean, drawing it very nicely. I mean, so here's 1, 2, 3, 4, and 5, and 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, and 24, right where wave B ends. Now let's look at a textbook example and see how many we can count as well, okay? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, and 24, right? So we're getting 24 in both of them. So it can't just be a pure coincidence that we're counting 24 exact pink waves here, right? And we're also counting 24 waves here as well, according to a textbook definition. So if we have 24 already. Technically, we should have 1, 2, 3, 4, and 5 more, guys, okay? We should have 5 more. So 24 plus 5 should be 29 waves altogether, right? So if we're only at 24, then we still, and you know what? Elliot Wave, to me, it's something that I really enjoy using to do my analysis, but other people will swear by other methods, right? The thing about Elliot Wave is that sometimes it can work against you because when there's a fundamental analysis, let's say there's some really positively overwhelming news that comes out, right? The price can just skyrocket, and then our Elliot Wave for that particular version, it's completely discounted, and then we have to draw it a different way, right? But over time, Elliott wave definitely works out in our favor because it gives us a specific count of waves, right? And it's analyzing market behavior and psychology. And it balances out supply and demand for you as well. Like it gives you an idea of the market sentiment. So I don't mean it balances out for you, but I mean it gives you an idea of the market sentiment for supply and demand. And that's why I find it a really, really powerful tool to use. So I don't think that this is really done yet. I think that this is still going to go up a little bit. But you know, if it doesn't, then we can maybe just end up drawing it like that, right? And that's okay as well. It's still pretty accurate. So let's just say that this is done. Then that's cool with me too. Notice that when it went to B for this one, right? When we draw our resistance down over here at the top, it didn't really hit this particular one either, right? As long as some of the points are hit, like the major ones that are hit, it's all right. Though I would prefer for it to hit this particular point, or at least get a rejection from the bears, right? So what I would personally like is to have a wick poking through it, and then it just gets rejected back down. Kind of like this one right here, for example. This one right here is a nice one, right? There is a wick that's poking right through the 55 moving average, and then it gets rejected back down here. So would you guys agree with me that if we counted 24 from literally a textbook definition that's written by, even though he's a professional writing it, usually Elliott Wave, when you do an analysis on it, it comes down to the individual person's skill. So that is something that will determine how well Elliott Wave is drawn. And to be quite honest, I've spent so much time studying Elliott Wave. I think I've read like 9 textbooks on it now, and we're talking like 200 pages. So I'm pretty confident in my ability to count Elliott Wave. In fact, I'm really freaking confident with it. So yeah. And you know, if we go to a closer time frame, okay guys, you know, we should get 5 waves going up there as well. Sometimes a 3 wave, right? Within this 1, 2, 3 here, we can get, you know, like this one happened to be a 3 wave. 1, 2, 3. So we can really break it down even further, guys. Like, see what I mean? 1, 2, 3, right? One might argue to count it differently. Like, so for example, one might argue that you can count it like that, like 1, like so 2, and maybe 3, and you know, maybe 4 right here, and 5, and then we can probably draw this one down to satisfy more requirements of Elliott Wave, where wave 4 doesn't cross into here. But either way, these can be either a 3 wave or a 5 wave. It doesn't really matter as long as it satisfies it, right? So this right here is what you would call a flat, okay? People call it a channel, right? But I think the technical name is actually a flat because it stays within a channel, right? So you guys call it a channel. I'm just calling it by the official definition. And this one here, we can count it as a wave like this, right? 1, 2, 3, 4, and 5. So check it out. 1, 2, 3, 4, and 5. And within all of these waves, there are also subwaves as well. Like this one's got 1, 2, 3, 4, and 5, right? But this one only happens to have 3 here. And this one only happens to have 3 as well. So there's many, many, many different ways to count Elliott Wave, but the main thing that matters the most to take away from it when you're doing it is to get the main count right, okay? That is really, really important. So do you guys notice what usually happens on these waves going up? Here, let me show you guys it since we're here already, right? And you guys want to know. So it usually does some shit like this all the time. Like for example, for this one, right? Like this one, it's hard to see, guys, but it's there, trust me. Let me just let me find a good example for you actually. What doesn't that look like a hot mess to you guys? Let me show you guys what it actually is, okay? Check this out. Nope, you can't see it on that time frame. Maybe not that one either. Sorry, I'm looking for it still. Like for example, this one right here, okay? It's hard to see sometimes, but when you actually like look at it, you can really notice it, okay? Watch. Sure, we can draw it like that. Actually, that one's kind of weak to do. I'm not really a big fan of this one, but definitely it satisfies that, right? This one just got a slight dip in it a little bit, but that's all right. It still satisfies the requirements of it, of basically a head and shoulder. A lot of the time it makes this, one top and then a really high top and then a right shoulder. So we can find them throughout everywhere on here on different time frames. But what I'm getting to is like this one as well, okay guys? It's really hard to see, but it definitely can count as it, I'd say. See, so look at this guy right there. And every time we find these formations of having one top there, a second top, and a third top, just basically just like that, where we have one top, we have two top, and then we have three top, you guys can see exactly what happens afterwards, right? So if you look really closely on here as well, do you guys kind of see a similar pattern happening? We have one top, we have two top, and we have three top. Assuming that it stays like this, it would actually be a really good head and shoulders pattern for me, right? Keep in mind that trading is very subjective, okay? So one might argue that it is something, and another person might be like, no, it's not this, okay? So we have to always respect the fact that people see things differently, right? And we all see things differently, and based on that, we trade it differently as well, okay? So don't ever argue with people about you're wrong and you're right. If you are right and they're wrong, no worries, just leave it be. Like, trust me, you don't want to argue about TA online. People are very subjective to their opinion, and people they like to stay strong to their opinion, so don't worry about it. So let's say that this was the top right here. Now how are we going to measure it? Okay, let's take a look at this really importantly. So let's say we took from here, first of all, A, B to C. Usually we shoot for a ratio of 1 to 1, okay? Watch this. Here's Fibonacci extension to B. Whoops, wrong one. From up there. Wrong one again. That's the right one. I just didn't want to misclick on it. Oh my goodness! Trend base fib extension. Yes. 1, 2, 3. Okay, there you go. So usually we shoot for a ratio target of 1 to 1. Do you guys notice something already? Right here. Look. Look. Check this out, guys. Okay? We always shoot for a target of 1 to 1. Now, what does a 1 to 1 target mean? It means that we take this distance right here, price range, from here to here, okay? And now we're getting the exact same range from the top to where it ended as well. So from right here to right there, okay? So if I move this down to right here, it's literally a 1 to 1 ratio, right? Do you guys see what I mean? I'm going to say that again. So we take this price range right here, and it's a 1 to 1 ratio of the last top of where it ended. And that's always a target. So what a lot of professional traders will do is they'll enter a short position right here, right? And they'll set their stop loss. Just as an example, we're just going to get into a position here, okay? At the top there, they'll enter a position, they will, and confirming a downtrend, of course, they will enter a position, right? And they will also, maybe they'll take a date range. Some people do take a range like this for a date to see how long it is, right? Actually, they would wait till the X right here. Yeah, that makes a lot more sense. And then they would literally put it right here. So look at this, guys. Look how accurate this is. If I clone this as well, and I doubled it, and I moved it just to down over here, right? It's basically bang on, right? See what I mean? Like, not only are we getting a 1-to-1 ratio for price range of where this one ended, but we're also getting a 1-to-1 ratio of the date as well, which is really, it's fucking scary, guys. Like, that's how fucking scary TA is. And I kid you not, like, I find similarities all the time in charts, and I don't know, I'm weird. I'm a weird analyst, guys. Like, I see things that people don't see. And when I see it, it's like magic. I don't know, I can't explain it. Like here, I see it as a double top as well, like for head and shoulder, just as an example, okay? This is how I see it. I'm probably wrong, but this is how I would confirm kind of a small downtrend or a downtrend in general, right? Like I see this right here, okay? I see a triple top here is again like 1, 2, and 3, okay? Some other people might not see it, but it's definitely what I see. So anyways, so then they would choose a target of 1-to-1 right here, okay? With a stop loss slightly lower than it, and that's what they will try to hit. And even though they got back up to here, believe it or not, a lot of swing traders, they wouldn't even worry about that, guys. They wouldn't even worry about it at all because it didn't even come close to their stop loss yet, right? They might be wondering, hey, is it going to hit it? And they'll get ready to cut it short just in case. But they would rather minimize their risk, right? And just make sure that if it does get really close to it or meets it, they'll cut their loss. But at the same time, they want to maximize their profit. So they want to make sure that if it does not hit their stop loss, they're going to keep riding it, right? And still shoot for that target. So let's say like it went down here and you close your target, great, right? That's probably what day traders would do. And then you'd probably go long here and you go short here. But some swing traders will just make sure they keep to their stop loss, and they'll target that 1-to-1 ratio right here. And what do you know? It actually hit it dead on. So if anyone played this position, they would have actually gained 35, 36% there. That's pretty big. So now that we have that theory in place, oh my goodness, I'm almost at my short already. I shorted from I think up here, 425 or somewhere up here as well for my longer term short. I play on many different accounts, right? I want to maximize my profits. So yeah, so what I do is I have, now I'm playing on 3 accounts because I have one for my main long-term ones and I have some leverage there. So I can't really touch any short or long leverage positions. And then I have like my swing trader account now too, where I'm holding this particular position, I'm holding it long. I shorted from right around here, like 420 to 425. And I'm shooting for a target of pretty low actually. So, but we'll get into that in just a minute. But for a day trader, right, you don't want to be holding your short position for more than a day, right? You would probably want to close it by the end of the day just to make sure that there's no trouble. I mean, I think we've all been there where you go to bed with a position and it's, oh man, is it ever a fucking nightmare, right? Going to bed with a position. I can't even explain how stressful it is, guys. I have my tablet, I got my cell phone, 3 cell phones actually, because I carry a lot of different authenticators. I'm that paranoid. And then what else do I have? I got my laptop as well, okay, guys? And I have a TV that is on all the time that's connected to Bitfinex and charts, right? But what I'm getting to is it is so stressful, guys, going to bed with a position, right? Especially even if you're playing like 1,000 or 5,000 or 500 or 10,000, whatever amount, it's really stressful. So I definitely advise that you guys don't hold your positions overnight as a day trader. And even if you're relatively new or experienced, as a swing trader, it's acceptable to hold it for a few days, right? But don't get into the habit of holding a position for too long and because something goes a little bit south, right? Try to capitalize on the profits as soon as you can, as soon as you feel comfortable, basically. As soon as you feel comfortable, take your profit, okay? And never feel bad about not taking as much profit as you can. But the good thing about feeling bad about not taking as much profit as you can, like let's say you went long and you closed it a little bit too early and you just kept seeing it go up and up and up and up. Of course, you'll feel bad about it, but what you can take away from that is that these lessons, right, that you learned when it rides upwards and you closed it very quickly, you can learn from these lessons actually. And then you analyze the chart and you go back and you're like, okay, I closed it right here. Well, what could I have done a lot differently? So just to give you an example, right? Let's say this one right here, right? Let's say this one right here that you closed it too early, right? You closed it a little bit too early. You're like, damn it, I could have closed it over there maybe. Well, you don't know if it's gonna get there or not, but let's say you weigh the risk of it completely reversing versus the risk of it actually going upwards, right? So let's say you didn't close it there, right? And then it went all the way down here, but it didn't really go lower than that, okay? Is that risk worth taking to see how far it could retrace? And then, if it does go really far, you can close your position here, right? But let's say it only retraced to here. Is that risk worth it, waiting for it to ride back up to here if you see that that's the bottom? So there's a lot of different ways to weigh the risk of also taking profit, right? So to me, I wouldn't have taken my profit up there. Definitely not. I would have waited for it to retrace. I would have opened up my Fibonacci tool right here, okay? Actually, I probably would have done it only to right. Yeah, I would have done it to here. And I realized that, this is the first wave going up and sometimes it could retrace really far back. I think I would have probably taken my profit, I would have cut my losses if this wick did not extend. I would have taken it right here if this kept going further. But hey, I still made a small profit, guys. Like I still made a profit from here to here, right? Just by being conservative. Because if it went lower than that, you take your profit. But because it didn't go lower than that, you actually get to take the profit all the way up there because it continues its uptrend. So that's a really important way to risk it as well, weigh the risk as well when you're using Fibonacci. So you guys will learn over time that taking profit is a very important skill, right? Sometimes we all panic and we're like, oh no, I took my profit way too early. I shouldn't have done that probably. And then you'll learn over time how to take profits a lot better and how to ride these waves. Because, the most important rule for taking profit is to stay in the game, okay, guys? And we look for a lot of indicators as well that will tell us if it's the very top or not. So, for example, this one was not the top, this red candle. It's just a correction, guys. This one is up top because you're getting a hammer on the top. This is just a normal correction. And when we actually count the waves, 1, 2, 3, it's really normal, right? So when you're going from basically A to this position, because this is A and that's B, right? And that's C. That's how you count it. A, B, C within waves A to B. So you can definitely count on A, B, C up there as well. Or you can count 1, 2, 3, 4, 5, right? So yeah, if you count the waves, it also helps you to learn how to take profit at the top. So anyways, let's get back into here. So I am seeing this right now already, right? We see a kind of left shoulder, a head, and a right shoulder there. So now we can conclude, guys, that this is indeed ABC correction, right? So I'm just going to draw it in for you guys to see this. A, B, and C, just like that, okay? So once again, I'm going to repeat things a lot of times because I want to help people learn and I want to make sure that you guys understand this as well. Within this pattern, A to B here, it is A, B, and C, okay? So now there's a lot of things that can happen, okay? When this final wave starts, many things can happen. If the strength ends up becoming as strong as this one, you guys have to keep in mind that, yeah, it's going to hit an exchange and it's going to spike upwards a little bit, but nothing fundamental has changed, okay, guys? It's not like something positively overwhelming news will have come out, right? It's just going to spike a little bit, guys. So don't think that it's going to spike to the moon and go to like $5, $6, $7, $8, $9, $10. We are still in a corrective phase right now, okay, guys? We are in a corrective phase, and we have now hit 0.5 Fibonacci level, okay? I'm going to delete this. I'm going to actually go to the very bottom of when it began, all right? This is where we're at, guys, from the bottom of when life began for our ETP. We are just about to hit. This is the 0.5 level, and this is the 0.6 level. So someone asked me to explain what Fibonacci is, right? We take it from the bottom to here, and we take it to where it ended. Now, it doesn't need to be right here, right? As long as on this particular y-axis, like the horizontal axis, lines up with it, okay? So you click on where it began, and then which is basically all the way here. So the 1 should always be where it began, and the 0 should always be where it ends, okay? Now, let's say it goes up to the top right here, right? Well, this region right here, guys, if it came back this much, say from 0 to 236, that's just 23.6% of it retracing. That's what they mean. It means that it moved 23.6% back to where it started. Now, if it moved from here to here, just for example, what would that be, guys? Well, that would be 32.8%, right? And then if it moved to here, for example, that would be 50% retracement, okay? And then if it moved from here, right, to the 618 level, that's a 61.8%. So if you guys notice, I'm actually gonna put this on the other side here so you can see it. So if you guys notice how far it retraced so far, right, just from where the top is, and we drag it down here to the bottom, okay, we trace about 50% so far. Now the magical number, and Fibonacci is a really powerful tool. It's found in everywhere in nature, guys, like from the way patterns are drawn to the way seashells are shaped, to the way the galaxies actually form, to the way our genes and our DNA is helixed in a coil. Man, it's an amazing number, and it's found everywhere in the universe. And these sequences, it's called a Fibonacci sequence, right? It has specific numbers in it, like 5, 8, 13, 21, I think 30, 37 or something, then 55. So there's a lot of numbers in the sequence, and these are Fibonacci number sequences by dividing certain ratios, okay? So it's a very powerful tool. Now, what I'm getting to is Fibonacci is very, very powerful. And when it gets to around the 61.8% level right here, that's where people start to panic. Don't know exactly why they panic. I don't know the psychology behind it too well. I suggest you guys read up on Fibonacci itself, right, to understand the psychology of that particular ratio. But that particular ratio in trading is a very key level psychologically, and people will tend to place lots of buy orders right over here because they want it to bounce off of this number. Now, if it goes lower than 618 to say 71 or 78.6, that's where people start to panic, right? And if it goes to this number about, there's a strong chance that it might actually just break through it and hit all the way back to where it began, to 1. And these levels right here are key levels for reversals, okay? Now, if you guys ever see anything that retraces to this particular zone, the 78.6 and the 1, you guys can probably expect a reversal, okay? Think of a double top. Think of a double top, okay? When you get a double top right here, like this, okay, I'm just gonna draw it right here. One top, okay, right here. And let's say we go all the way back down. If we drew Fibonacci, say from where it began to the top, right? Obviously, it retraces back to like a pretty strong point, right? Like a reversal. So that's how I like to describe it as well. So anyways, we are at the 58.6 level right now. 58.6. and or sorry, the 50% level. And right now, just based on everything going on and based on the 24 waves that we counted, based on this being the C correction, just visually, right? It looks like it's a C correction, and like it could be the very end right now as well. Like we could see this as well. We can probably confirm it by zooming in closer, but I'm just too lazy for that shit. So yeah, so let's say that that has now officially ended, guys. And because these waves are getting smaller, notice that this ABC is really big, okay? It's huge, right? But this ABC is getting smaller and smaller. And the reason for that is because it's now basically wedging. It's now forming this falling, falling bullish wedge, okay, guys? You have to remember that a bullish wedge like this that I'm drawing, like this, where it squeezes, but it squeezes in this particular way, that's actually bullish. So when it goes like that, right, it comes down and corrects, and it just ends up going upwards like that. You can almost call it a flag, but not quite. Flag has a little bit of a different characteristic. Now, if we look at it the other way, right, like a rising wedge, so if we had one going up like that, and then, and it was contracting like that, so let's say, if it was coming downwards like this, and it just did a corrective pattern, yeah, it looks like it's going up, but then eventually it just ends up breaking down. So what we call these is a rising bearish wedge. And this one here is a falling bullish wedge. Okay, guys? So every time you see a channel going upwards like that, play it. Absolutely play it, guys. It's gonna play, and guarantee that you guys are gonna be very profitable if you play that. Now, if we actually look at some of these characteristics as well, I'm going to zoom in because it actually is mind-blowing to see it like in actual action, okay? So I'm going to draw a line just like that, okay? And now I'm going to draw it from this point to this point right here. What do you guys see? Okay, clearly you see a wedge right now, right? And usually there's 5 waves in here. So this one comes down for 1, like I was drawing earlier. So it's going to come down like 1 like that. Then we have 2, or actually that's not counting as 1. Now this is 1, it's 2, 3, 4, and actually 5, which makes a head and shoulder. And it actually will break down here. I'm sure that it's going to break down now that we've got our wave counting properly. So once again, notice that you guys from X to A, we see 1, 2, 3, 4, 5 coming down here. Well, this one should form a 5-wave pattern as well. If this one formed 5, okay, this one formed 5, this one I didn't count it, this one has 5 as well. I mean, we can see it pretty clearly. It's ugly, but it's there. 1, 2, 3, 4, and 5. And it still fits the characteristic of it because the wave 4 does not retrace into the territory of wave 1. So do you guys think it's possible for us to see something like this here? Yeah, definitely possible, right? Notice that this one is more horizontal, okay? It's more horizontal than, say, from A to B here. This one's much more strength, right? It's more vertical. This one's more horizontal. So we can almost assume that this one here for the final one could be probably something like that, I'd say as well, right? Maybe even more horizontal like this as well, where we're just gonna hit like 350, 360 or something. Maybe not even, like maybe it'll hit like right here, and we're just gonna get a few small waves down here, okay? So it could even be anywhere up to here, but the main thing to take away from this is that the Fibonacci key levels, it's gonna do one of 2 things, right? It can extend up to right here and just basically have a double bottom, because this one had a double bottom right here. A and B right there had a double bottom, or sorry, A and C, right? So why couldn't we have a double bottom here as well? It's very likely, but if we don't get a double bottom, what could be very likely is that it actually just ends up touching $2.79 in a few days. So the rally will definitely cause a rally on HIT BTC when it gets added. But guys, we're not going to expect it to have as much volume as Bitfinex, for example, right? And it's going to take a while for it to gain traction. This coin needs a correction. Those Europeans, they'll get very, very excited, right? It's a new coin. awesome new coin. Usually people they'll buy new coins when it hits a market, right? Because a lot of people may not even know what it is. And if it's the same type of mentality as Koreans, for example, they just buy whatever coin that hits their exchange because it's new and it's shiny and it's just part of the culture. But just generally speaking as well, right? The FOMO is real, guys. A lot of people will buy a new coin without even knowing what the heck it is. They'll buy like 10, 20, 30, 50, 100, whatever, because it's new. They don't know what it is. They'll buy now, research later. That is kind of the mentality of cryptocurrency, guys. Buy now, research later when it hits a new coin. You guys know what? That's my mentality when a new coin gets added to Bitfinex and I don't know about it. Music Go, I had no idea what the heck it was, guys. I had no idea what it was, okay? I'm like, oh, it's 50 cents. I'll buy a few thousand of these coins, okay? And I rode that bastard to like pretty high, I have to admit, to I think like 450 or $6 at first, and then it corrected to like $4, and I'm like, whoa, made a pretty good profit. I made a 1,200% profit on my investment. And then when it dipped again $4, I just bought even more, and I rode that thing to like $10, $11, right? And then it corrected to like $7, and then I bought more at $7, and those are the ones that I'm still holding to this day for Go, where I'm pretty much broken even. But what I'm getting to is that people will buy now and they'll research later, okay? It's just unfortunately human nature when it comes to cryptocurrency. But yeah, so we should be expecting like 5 waves in here as well, okay guys? There's no way we're not going to get 5 waves. It's human nature. What could happen is this, okay? I'm guessing it'll come down, right? And then right here, okay? And then as soon as it hits the server, or sorry, the hit BTC, it's probably gonna spike up, like something like that, okay? Spike up like that. And I think it's just gonna end up making the correction like this instead. Like something weird like that. Or even like come down, it'll spike outside of this RSI zone to like 415, 420, and then it'll just maybe continue its downtrend like that. You know, something like that, okay? So you guys can't expect too much of an increase. I mean, let's say, like, we have a few days to go, you know, like we got till November 1st, guys. We have how much time here? We have till November 1st. We have a whole day, guys. Like, that's a lot of time, in my opinion. I mean, for example, here, 350, like, how much did this gain? Right? This one in 14 hours only, like half a day, it gained 20%, right? So let's just say that this one ends up, we'll just take, which wave should we use? You know what? Let's just use this wave. Yeah, let's use this wave. Actually, nah. Let's use the same strength as this wave right here. Because usually we'll assume the same strength, right? So let's say on the 31st at 2 p.m. my time, Central Time, it hits here. I would hope that it gains roughly this much. Fuck, they need to make these tools a lot better. Man, where is it, guys? There we go. If it actually came down to $3.25, and that's possible, guys, don't discount it. We are still on that wave, so don't discount it. I expect it to shoot up 25%, okay? Do you want to see what happened to Omizi Go when it hit? When it hit Bitfinex? Oops. Right here, guys. We were supposed to do this pattern for the head and shoulder, like that, okay? That's normal, right? One would expect that. But September 11th, lest we forget that day, guys, this is the day that it was added to Poloniex. And it spiked up 22%. Now, HIT BTC is a pretty big exchange as well, okay, guys? And we're talking about a $9, an $11 coin that's spiked up to like $13 or 22%. So that is the power that being on a big exchange can add, right? You're having a lot more basically liquidity, right? There's a lot more liquidity and much more purchasing availability. So the chance of it spiking up, absolutely. So we also have to think about it from their perspective, right? People will argue, hey, if it was going to spike, it would have spiked up already. Well, look at me, for example. I only trade on Bitfinex, okay, guys? I don't trade on any other exchange. There's a lot of coins I might want to be interested in on another exchange like Poloniex or Bittrex, but I don't trade on there because I only want to stick to one exchange. So we have to think about it from those other people's perspectives as well, right? And they might be very excited to actually get these particular coins on their exchange, so they'll be all over it, right? And let's face it, ETP is a really hot coin right now, guys. It's a hot coin. So if we've learned anything, just from the fact that some people might only be trading on their exchange, right? Some people may not even know what kind of coin this is. And now we have a new coin that's getting very popular added to a new exchange. Whether they know what it is or don't know what it is, the point is people are going to be trading it, right? And there's going to be more demand in general. Now the supply stays the same, guys. It's not like there's a bigger amount of volume out there, or sorry, coins out there, right? But there will be more liquidity because it's going to be available in different marketplaces. So when we think of it from that perspective, where the supply is the same, but now a lot of people have access to it, right? And because of the amount of users that have access to it, the demand itself will actually increase. So what happens, guys, if supply is restricted but demand increases? Then price increases as well, right? So we can easily assume, just based on my small example with Poloniex, that 20 to 25% gain is very likely. So do you guys think, okay, I know some of you guys might think I'm crazy that it might hit $3.20 by then, but is it really that crazy when we think about it, guys, okay? Let's say we did a 1-to-1 ratio as well, using the same theory from A to B to C, okay? I'm going to take it from point A to point B to point C. Now let's go to a 1-to-1 target first of all right? A 1-to-1 target, remember we were talking about that? So if this right here was a 1-to-1 target, for example, right here, this is range, just call it 1. And then now we take it to where point C started, right? That's how we get this 100% ratio there. So just to show you what I mean, one more time, this is the distance that it traveled from A to B right here, right? And then it comes down, and then after the correction, it's also the same distance that it travels to here. And what do you guys notice? At a 1-to-1 ratio, we're at about $3.54, which is exactly where A is right here, right? So, it could be anywhere between $3.50 where we'll actually get a double bottom. Guys, don't call this a double bottom. Okay, I've been in the Metaverse channel, I've been scouring the internet, and people are like, yeah, that's a double bottom. Guys, that is not a double bottom. Trust me, okay, guys? This is not a double bottom. This is a corrective phase, okay? You guys want to see what a double bottom is? Let me show you. Okay? This is a double bottom, okay, guys? You guys see how symmetric this is? I'm going to draw a line so you guys can see. This right here is a double bottom, right here. Okay? That is a double bottom, okay? Where it pretty much gets to the exact same point, or the technical term is a truncated fifth, okay? But this one here had a low of 227. This one had a low of 222. See that? 227. Look on the top left right here. 227, like 4.227 the low, and this one's low was 4.222, meaning this one was slightly lower and this one is slightly higher, right? Just basically by 0.00 whatever 4 cents, right? But that's exactly what the exact definition, the official definition of a double bottom is that where C, or where the next wave does not quite make it to the point of where the previous one was. This is the official freaking definition, guys. So I want to make sure that you guys don't do something like call this a double bottom, okay, guys? It is absolutely not a double bottom. I promise you, okay? This one right here was a good, pretty much double top, you can say, right? Some might argue this is like a small fifth wave there. You can call that a double top right there as well, where this one was higher and this one was only slightly lower, okay? You can argue that this is a double top here as well, but do not call this a double bottom because it doesn't even come close to hitting it. So by the time we've talked about this and me saying it was going to decline, it has actually dropped 7 cents already, guys. That's quite a bit. I think we've been talking about it. No, not 7 cents quite. Maybe 7 cents, like 402. Well, I think I'm quite into this video. So yeah, notice that I said it was going to form a head and shoulders, okay? I mean, we're on the 5-minute chart right now, so it's hard to see. But like I mentioned, I think it's going to form a, to me, it looks like a head and shoulder, okay, guys? And once it breaks this line here, it's just going to reverse, and it's going to start its official wave. And that one is going to be very much so over, okay? That's what I think it's going to do right here. Pretty much of that, we'll just say, okay? And then once it does that, guys, you can count on it starting this official wave. So what have we learned and to take away from this lesson with ETP? Well, what we've learned, guys, is that we're not done correction yet, okay? We're far from done correction because we've counted the 24 waves. We have just finished A, B, C pretty much, right? It's not like this is just gonna magically go up, guys. It's really not possible based on Elliot Wave counting, right? Elliot Wave counting is, to me, it's actually very, very predictable, okay? Because we know exactly what kind of wave count we're in, and because we know that this is A, B, C by literally confirming with textbooks and by counting ourselves and just exact definitions where they research all the psychology behind it, which I care about it a lot, but it's something we're not going to get too into here, and because it's going to take a long time, to be honest, and they're very, very time consuming. So guys, if we take a Fibonacci ratio once again, we could be targeting anywhere between 365, or sorry, pretty much I'm going to draw the zone for you. This is going to be my buy zone to go long. And you guys know me better than that by now if you followed me on Twitter. Like I call out my longs and I call out my shorts, right? Pretty much as I'm doing it. So I will promise you guys that this is the region where I'll be buying right here. I'm not going to buy all of it right here, right? I'm going to maybe buy like 500 if it hits some, I'll probably end up buying like 500 if it hits right here. I'll buy 500 more around the $3.65 range. I'll buy 500 more right around here. And if I feel that is the absolute lowest it's going to go, then I'm just going to start accumulating even more. But then if it goes even lower, right, I'll move my buy zones to over here. And the reasons why you keep buying slowly is because you accumulate slowly so you don't scare the market, and so you can average out your base price this way, right? Rather than doing one gigantic market execution of 5,000 and panicking the market, you have to make sure that you participate in that accumulation phase with the public and investors as well, okay? And then once we finish that phase, right, we just end up breaking out in the excess phase and we leave everyone behind in the dust that wanted cheaper coins, but they didn't. Tough luck, okay? They missed on the accumulation phase, and the reason why these excess phase starts is for mainly 2 reasons, right? So excess phase is when you get like a massive breakout, and you guys know what I'm talking about. We're talking about crazy 85 RSI, and then you guys look at it, you're like, damn it, I should have bought, right? And then you buy anyways, and that's what we want to encourage. We want people to be encouraged to add into strength, right? So we are starting the excess phase when we just skyrocket it. And then you guys, basically everyone who didn't buy with the FOMO, they'll buy into it and they'll add even more strength to it. So that's reason 1. And the reason 2 is because people are very hopeful because it's very, very slow during the accumulation phase. And they'll be like, okay, it's going to go down a little bit more. It's going to go down a little bit more. It's going to go down a little bit more. And then because they're in a short position, right? And then boom, it just skyrockets. So one of 2 things can happen in that particular skyrocketing phase. One, people will close their short, right? And then they'll end up going long with it because it makes them buy into a position. And the second thing that can happen is they get liquidated, which is even better, guys, because we squeeze out all the shorts and there's no more chance for them. So that's why these particular phases are really important, right? That's why you guys will see, small lulls like this, right? Small lulls like this because people are slowly buying during the accumulation phase, right? That's why you'll see, here RSI is really low, But if we just look on some time frames, it's really easy to tell when the accumulation phase is as well. Like for example, right here, right before the breakout, people are just accumulating really, really slowly. Right here as well, they're accumulating really slowly. Here as well, they're accumulating slowly during the correction and then breakout. Right, correction with accumulation, then breakout. Right. So yeah, so once again, you guys know my target. My target is going to basically be right here, anywhere between 362 all the way to 317 if we make it down to these fib levels. Is it realistic? Absolutely, it's realistic, guys, for us to hit this target. What is not realistic? For us to just skyrocket out of here and just skip this entire last final wave. That's absolutely necessary. Why is it necessary? Because that's just how the market cycle works, guys. You can't skip these things. You know what I mean? Like you can't skip these things like this, for example. Okay, like having 5 waves going up here. It just doesn't happen. However you count it, there's always going to be 5 waves. Okay, like here's 1, here's 2, and here's 3, 4, and 5. Okay, that's how it is. Unfortunately, it's just how it is, guys. So yeah. So anyways, I think I'm done for this particular video. So just a quick summary, buy zone is a really good buy zone in general based on Fibonacci numbers is pretty much, it depends on how the general market is, but basically between, you know, the $3.65 all the way to $3.20. And this is all likely to happen before it hit BTC, right? So don't be surprised if there's a big downtrend. Now, once again, we're going to go over quick targets for Fibonacci extensions after we finish here, just so I can summarize and give you guys a quick overview of it. Let's say I started there, and let's say it actually ended up hitting a double bottom, like right here. We'll use that end. Okay, well, we use fib extension, and check this out, assuming it can hit a ratio again of 1 to 1, could be $8.58, and the second target is $11.70. So that's one target zone right there, and a second target zone will be somewhere up there. Okay, so once again, that's $8 to $9 range, which is round up, and we'll say $11 to $12 range as well. Can it actually hit it? Absolutely, it sure can, guys. If I just use a random Fibonacci target like this one right here, I mean, like I mentioned last time, this one hit a 1 to 1 ratio. Okay, see this 1 to 1 number right there, and struggled, and it almost hit the 168 level as well. So it's very realistic that it could hit here. But today, it was just to give you guys a summary on where we currently stand. So I hope you guys have learned something from this video, and make sure you guys always study your technical analysis every day, and also make sure you check out their Twitter. If you're following ETP, make sure you guys have Twitter and follow all the coins that you're invested in. It's very important to keep up with the news. So if you guys like my video, give me a thumbs up, guys. If you guys like what I'm doing and you appreciate the educational videos that I'm making, definitely subscribe to me and follow me on Twitter, because I love to give play-by-plays. Take it easy, and I will see you guys tomorrow with, guess what? I'm gonna do a crazy in-depth Elliot Wave technical analysis on on IOTA. That's right, I ought to do a TA on IOTA. See what I did there, guys? You know, it might not be exactly tomorrow. It might be on Wednesday, right? Like after we play the hit BTC, because I might allocate a lot of my time on Tuesday to just do more TA. So you guys, okay, I take it back. It might not be tomorrow, but guaranteed before Wednesday evening, okay? I'll make sure that I have an IOTA TA for you guys. It's going to be like 1 hour long, but it's going to cover everything in quite detail. So have yourselves a great night, guys, and thank you for watching. Bye now.